Good morning, everyone. Welcome to our Friday morning trading session. The market's very active through yesterday afternoon. I hope you were able to capture some of that enormous downtrend that developed later in the day. Right now, we've got a little bit of an opening gap. This, of course, the NASDAQ Eagle. Oh dear, my mouse is acting up a little bit here. So you can see the morning session relatively quiet, and then in the afternoon we got this big trend change signal, huge fall off. The market stuttered a little bit, another big fall off into the close, and then I think it was shell shock through the night because there wasn't a whole lot that was going on. And here we find ourselves off the open with the market making a little bit of a dip lower and now coming back. I suspect to try to get into this opening gap that's above the market here. The market left off around 46.75. I'm going to give them a few minutes here to get their bearings. Looks like we're working a trend change signal here on the Falcon. And we already had a first micro macro cross here on the Hawk. Russell's asking what happened at 8:28 Central this morning. Well, let's see here. 8:28 Central, that's 6:28 my time, just pre-market. I don't know. I know what happened at an hour earlier. At 5:30 Pacific, 8:30 Eastern, we had the non-farm payroll come out, and that's always a biggie. I forgot to mention that to you yesterday. That's kind of going to set the tone for the next few days. It's always one of those reports that's taken into consideration when the Fed is considering raising interest rates. All right, so we're getting a little bit of a trend change now. Oh, come on, Raptor. You're supposed to drift into the band here and give me another signal. Really? That's going to be my trend change signal, my cloud crossover signal way up there? Yep, I guess it is. All right, well, we've moved into that gap now. We're back here now to where the market left off last night. This 46.75 area. just curious where the trend line falls on all this. There's our trend line just above the market. I get bit sometimes trying to buy into a down trend line. So we'll wait and see. The market looking very strong right now. No, they're not going to give me another chance, are they? All right, we are seeing a little bit of a reaction here. Yeah, Tony says he's waiting for the macro pullback in the hawk on the NQ. The sellers are going to show up here somewhere. All right, here's a macro pullback now. The problem is we got to run this trade fairly deep. I'm going to dial down the risk amount. Shoot, can't do it. Okay, maybe we'll look for a second push opportunity. Here's still a macro pullback signal. I can take it above this little itty bitty swing high. And again, we're right into this trend line now, and I will try to run this out. And now we're into yellow bars. right, here comes a red bar buy signal. We'll see whether or not the buyers dig in. All right, and now we're trying to get a first micro macro cross lower. So some definite reaction to that trend line that printed earlier. Mark, uh, Mark says a strange thing happening on my charts. I can't get the dynamic equivolume bars to show up on any of my charts. I've opened a new chart and it won't print. I have sent an email to Ben, but it's weird that it's happening for no apparent reason. Candlesticks work just fine, just no dynamic equivolume bars for some reason. That is odd. Sometimes if you uninstall the indicator and reinstall it, it will correct itself. You could try that. Oh, come on. Where'd the bulls go? No, they're going to tag me. A big run up and momentum just evaporated. Oh, look at that, the stinkers. Well, this is how yesterday started, but we did manage to pull off a good trade in the afternoon. Oh, yeah. And now they're going to turn and rally again? Gotta love that. All right, so we're getting a little bit of conflict now. We're back into the hard edge. We're producing a macro pullback. So the eagle is looking bullish, the hawk, the falcon looking bearish, the raptor also into the hard edge here. So we're a little conflicted. Yeah, Russell's asking, what about that eagle signal? Yeah, it's a red bar buy. No question about it. I'd probably wait for it to flip over on the ATR here, which means I'm going to enter above 46.73 quarter. It's this trend line that's getting in the way. The immediate trend is down, but you're going to find you're going to get your best signals when the tools are more or less in sync. So what do I mean by that? Well, if your eagle is looking like this, where it's decidedly bearish and you're producing sell signals on the hawk and sell signals on the falcon, and your raptor is also looking a little bit more bearish, everything is going to flow better. When you're getting conflicting signals, the market is either in transition or it's going into chop. Remember, you don't need to take every single signal. It's okay for you to hang out and wait for what you consider to be a cherry signal, something that, you know, the setup is very sound, very solid. It's okay. You can do that, especially if you start the day with the mindset that you only want 2 or 3 signals. And here they go now to the downside. Pardon me, we did get a little bit of a cloud crossover. Excuse me a moment. So the Raptor here giving us some very fast signals. We've got a cloud crossover here to the short side. A funny looking cloud crossover to the upside. But it looks like what started as a bull market is now turning very much into a bear market. Stephen's asking, was that a sell signal at 649? Well, it depends which tool you're looking at. Yes, we did. If you're looking here at the Raptor, that's the cloud crossover signal right there. So the way the cloud crossover works is the clouds cross over and the market moves into the cloud, and then the cloud pushes the market back out and we generate a signal. That's your cloud crossover. This is perhaps let's go back a little further. Well, it's not quite textbook either. All right. Yeah, if the market, okay, this is forming up to be a little bit more textbook. The clouds have crossed over. It's a little bit more obvious now that the clouds have crossed. The market has retreated back into the cloud. If it comes out of here and produces a sell signal, that should be a good sell signal for us. But if the cloud starts to twist up like a rope, then it's also indicative of a sideways market. Well, they're taking turns beating each other up here. Oh, on the hawk, Stephen asks, was that a sell signal at 649? Well, this was our macro pullback signal. That was definitely a sell signal. This morning's a little tough to gauge because the market's paying off both directions. We had strong follow through on the buys, except for this macro pullback. Then we had strong follow through on the sells, and now we're coming back with a first macro cross slash macro pullback. Okay, now we're getting a red bar buy, so it looks like the buyer's going to step in here again. Of course, with the red bar buy, you can always set up to short the failure. Oh, I shouldn't be taking two contracts on this, but what the heck. Okay, so here's the red bar buy. Oh, now I only get one contract. I was going to try to take profit on one and run one out. All right. So they didn't want to rally for me off that macro pullback. Let's see if they'll head lower off the red bar buy. See, until the market really tips its hand which way it wants to go, all these trades are going to be a little bit of a crapshoot. And of course we're getting these yellow bar clusters now, so the market might be moving sideways, we'll see. All right, if we trade, here we go. I was going to say, if we trade below these lows, we should get a little bit of traction. Coming back now with the first micro-macro cross signal. All right, we'll let this one perk away. Well, Tom asks, around 6:42 your time, you had a sell signal on the Raptor. Is that a good signal when there are more than the normal two signals? All right, let's go here now to the Raptor. Shoot, I think I just got tagged at break even. All right, so 6:42 my time. All right, I think this is the signal here that Tom is referring to. Okay, with the Raptor, excuse me, the high probability signals with the Raptor. We've got the cloud crossover signal. So the clouds cross, we produce a signal. That's a high probability signal on the Raptor. Another high probability signal on the Raptor is the double pullback signal, where let's see if I can find you one that looks a little bit more textbook. Well, actually, this one looks textbook, but it didn't have the follow-through. The market moves into the cloud, comes out, produces a signal, moves back into the cloud, gets rejected a second time, produces a signal. That's your double pullback signal. That's a high probability signal, even though this time it didn't really follow through. And that was probably because it came at the end of the day, just as the market was closing. That is a high probability signal. So you've got your trend change signal, which is your cloud crossover. You've got your double pullback, which is a continuation signal. After that, you also have your counter trend signal, which is your soft edge buy or sell. Now let's see if I can find you a nice example of that. See, when you're with trend, the double pullback is very strong. So here the market moves in, comes out, produces a signal, moves in, comes out, produces a signal. This is all with trend. The market's well underway. We have a trend. And then the double pullback is a continuation signal. All right, let me see if I can find you a soft edge buy or sell. I'm trying to find you one that, well, all right, this one will do. As with all counter-trend signals, you first need to have a trend. So here we have a nice downtrend. The market comes up, comes down, produces our first signal. Okay, so now we're thinking, oh, maybe double pullback. And what happens is the market comes up and it produces a buy signal. Now this buy signal, this is now a soft edge buy. This buy signal must always, always, always be preceded by a retest of the extreme. In this case, the extreme is the low. And if you look carefully here, you see that this swing came up a few ticks short of this swing. Not that it matters. It could have come a couple ticks deeper. The principle is still the same. The bears are losing their grip on the market. This is a soft edge buy. It also tends to develop when the band gets very, very broad. All right, notice here, band very, very broad. Market comes up, retests the low, comes up, we produce a buy signal. This is also a soft edge buy, even though we've exceeded the previous low. This is a slight variation on it. Ideally, your retest will always come up short. So ideally, your retest is like that. The market comes up, produces a buy signal. This is your soft edge buy. All right, so first thing, you need a trend. Second thing, you need a retest and a failure. In other words, the trend is no longer resuming, and then you come back with a buy signal. Ideally, you want a rather wide band, although that is not crucial. We normally like to see a wide band because the hard edge of the band is our profit objective. We almost always anticipate a reaction when we hit the hard edge. If the signal produces very close to the hard edge, there could still be some very strong follow-through. So just because we're trading near the hard edge is not a reason not to take that soft edge buy signal. Although in this instance, oh, it hit the hard edge a couple times and then I think it finally broke out. There we go. All right, so those are your basic raptor signals. Then you also get your hard edge bounces. This is actually how the whole double band with the raptor developed, is to highlight the hard edge bounces. So I guess 4 signals in all. We've got hard edge bounces, we've got the double pullback, and then we have the cloud crossover and the soft edge buy and sell. So here at 6:42-ish my time, this signal does not correspond with any of those. Right? It's neither a soft edge sell, it's not really a cloud crossover. The cloud crossover should come deeper. It should come into the cloud. It's not a continuation signal because it's not bouncing off of the hard edge. It's not a double pullback. So even though it's signaled, it's not really a signal. It did not engage, and now we produce a sell signal. Now, if you're referring to this one, yes, that is a soft edge sell. And these tests of the extreme that I was talking about, sometimes they can be very quick and very subtle. So there's a soft edge sell, and yes, you could get all over shorting that. So if you spotted that, Tom, very good. Oh yes, Tom says the short entry signal. Yes, very good. Well done. It doesn't matter that it double prints, no. No, what matters is that you have the structure. So we've got a trend, and then we have the market showing us that it can no longer resume the trend, and we come back and we produce a sell signal. No, well done. I wish they had a shortcut to clear your drawing tools. All right, here we come again. Here come the buyers, and this is a cloud crossover signal. It's not a very good cloud crossover signal. I'm going to try to buy it. There we go. I'm going to place my stops below the swing low. Come on, computer. And we're right back into this whole neighborhood where that trend line bounced us around before. Okay, this might be the last chance for this market. And I'm running the deep stop because the way this cloud crossover is looking, it's not as pure as some of the others. We may well see a big retrace into the trading band. Like I said, we're still dealing with that downtrend line. And it looks as though it's going to kick the market down a little bit. Oh, way to go, Tony. Tony's cleaning up here. Tony says, went short on a trend line touch signal on crude oil at 49.98. Must be 40. Must be a typo. 43.98, I'm assuming, right here. Took a little bit of heat, made my high probability target at 43.79. Well done. 3 contracts, 60 ticks. Nicely done, Tony. That's cherry picking a trade. Well done. That's what you want to do. You want to hold out for those best signals and really capitalize on those. And sometimes I get a little carried away here in the trade room highlighting opportunities for you. I'm going to try to scale that back a little bit and try to focus on the higher probability setups. I'm going to roll my break even up here a little bit as we're still a little conflicted. The highs of the morning right up here. What I'll do, I think, is I'll get my break even and my profit target at the same time. I think it's important to give this market some room here today because the buyers and sellers equally strong. It's going to turn out to be an expensive day if we keep getting stopped out before they have a chance to go anywhere. Ah, like that. Well, have to wait for the cloud crossover to complete. My fault for not turning that off. Wow, what a balanced market. It truly is. It's rejecting the highs every time it gets up there. And every time it gets near the hard edge of the band or anywhere near the lows, it's not liking that a whole lot either. And now it looks like we're moving lower again, so a little bit of a wedgie type thing happening. Ryman writes, good morning, Eric. Well, good morning, Ryman. I found that on Friday it can be hard to place the orders using Trade Manager, so I now use the Trailblazer on Fridays. When I like the direction, I just take the market order right away. I set 2 contracts and 20 ticks. I just scalp and take what is available. That's a pretty good plan, Ryman. Nothing wrong with taking what the market's giving. Actually, that's your job description as a trader. Our job is not to predict. Our job is only to take what the market is giving us. Now here, once again, we're getting a mixed bag of signals. We're getting a first micro-macro cross to sell on the hawk, but no real test of the extreme yet, so don't be surprised if this retreats higher. A possible trend change signal here on the falcon, but we're back into the hard edge on both the eagle and the raptor. so we're getting a hard edge bounce here on the eagle, but like I said, we've got conflicting signals on the other two tools. Oop, I was just going to say we'll take that on a flip of the ATR. Now, if we get above this high right here, around the 46.84, 85 area, the market could really get a little bit of room to run. I'm going to open up this trade and see if we can't see it run up a little bit or not. Yeah, Paul says, I haven't seen the market swing like this in a long time. Ain't that the truth? The market's been very whippy with decent moves higher and lower. All right, here we go. I'm going to make a run to the highs. This is why I didn't want to get stopped out of my Raptor trade early, by the way. But what are you going to do? Elmer's asking about the ATR setting here on the Eagle. Is that an add-on? Let me show you how to put that on there, Elmer. So if you go here to your indicator window, it's part of your trade manager. If you pull down to these tools that are labeled IW, you're going to find one that says IW. There it is. IW TM ATR trail. That's what your trade manager uses to plot your stops, your stop strategy. If you double click on that, it's going to end up here in your indicator assortment. And just click apply and voila, you'll have a squiggly red and blue line on your chart. Now, I think Ben has made that a default on the Eagle now, so you can check with him. But this was brought to my attention by Mike Filigera, who uses the DTS system to trade the stock market. And he said, you know, Eric, you may want to take a look at the ATR relative to the signals and just use it as an additional filter. And he was right, and I found it a very helpful indicator for gauging when it was safe, you know, air quotes, safe to enter a trade. Having the ATR in sync with the signal seems to avoid some trades that don't necessarily have momentum behind them at the moment. And the criteria for adding anything to your chart, of course, is does it help you make a decision? And I found that, yes, this did help me make a decision, and so I added it to my chart. Mike Filigera actually even trades it more aggressively than that. He will trade the signal as soon as it is in sync with the ATR, regardless of what the trading band does. So for instance, here was a buy signal in sync with the ATR, Mike would be buying. Here was a sell signal in sync with the ATR, he would already be selling. Now, I don't know where his stops are at. His stops could be much more aggressive because he's looking for some immediate momentum. But you can see even for the odd time where you may get tagged on a trade that doesn't have a lot of follow through to it, when it does find that momentum, you're usually in early, and there's usually very good follow through. So there's a little tidbit. But yeah, it's like I say, I find it helpful in the decision-making process, and that's the only reason you should ever put anything on your chart. Yeah, Elmer says, Ben told me I shouldn't mess around with those IWTN files. No, that's right, because it's what your trade manager relies on to plot your stops correctly. But adding it to the indicator panel, as I showed you, will have it print your ATR line on your chart. Oh my gosh, here we are yet again struggling with the high. Right back to the high. Once again, the market trying to knock down the buyers. I wonder if I should take this to break even. All right. All right, last chance. Last chance for you buyers. Nope. All right, let's put that away. We got ourselves in a tight little predicament here now. The market's either going to rally above the highs, or we're going to get a sell signal. Okay, so here's our buy signal. I would probably delay the buy until we're above the highs. And honestly, I would almost prefer a sell signal here. If the market fails at this point, and produces a sell signal, that'll be a soft edge sell. And I would love to see it print somewhere near this low. And I would be all over shorting that. Yeah, so this low right here, pardon me, I would love to see the market trade down below that. Paul, I'm going to get to your question here in a second. Paul asked, Eric on the Eagle, do you only take the green bar sell when it's on the side of the soft edge? No. And I'll show you that in a second here. I don't want to miss this signal. The green bar sell. Yes, I would not take a green bar sell here. The green bar sell only occurs when it intersects the hard edge in a downtrend. Green bar sell is also a continuation signal. Oh, the crude oil market just lit up. All right, so here's one pullback into the hard edge. Well, you could count this actually as the second pullback. But we did make a new, shoot, we're not getting the clear signal I was hoping for. All right, so let's see if we get back above this high then. I'm getting in very late on this signal here. We're getting a first micro macro cross. We're getting a green bar buy signal. All right, so let's try that one more time. Oops. Okay, what I'm going to do is I'm going to hold my stops 2 swings back. All right, so Paul's asking, Eric, on the Eagle, do you only take the green bar sell when it's on the side of the soft edge? This is a green bar sell, even though it's drifted through the hard edge. That does not invalidate the signal. So long as the band is still stacked to sell, the green bar sell is valid. Sometimes you'll see the green bar sell drift quite far through the hard edge. But normally we just look for it to encounter the hard edge and there's some sort of reaction. And then of course the opposite would be the red bar buy. The green bar sell, however, is a continuation signal. It comes in a trend. When you get, let me see if I can find you some choppiness. All right, it's not the best example of choppiness, but when you get the eagle going back and forth, back and forth, back and forth, red bar buys and green bar sells don't count for anything because there is no trend. You have to remember, those are continuation signals. So when you're in a trend, see how this one flipped ever so slightly? That would not be enough for me to negate the green bar sell. I may wait for it to turn over the ATR, but we've established a downtrend. We're in a downtrend, we come back, we produced a green bar sell. I may not get on it right at the hash mark, but certainly when the ATR flips over, it would be worth a try. Or, conversely, if you do try to take it early, it's not all bad because now you've got an opportunity perhaps to do something with your stops before you're potentially retesting the low, right? I would probably shoot a trend line across here and I would say, well, if the market gets down here 47, 48, 47, 45, I want to be able to at least to get my stops to break even. So by entering earlier, that enables me to do that. So the market comes down and I get a little bit of a flinch. Right now I can think, well, maybe I'll bring my stop in above here, or maybe even jam it to break even, depending how you feel about the trade. And you ride out that little swing, and now you come down here and look at what's happening. You're getting that reaction. So at this point, I would probably say, yeah, okay, let's take the trade to break even, or let's roll up our profit objective if we're able to run more than one contract. All right, so remember this band, if it goes out of sync, it's kind of like the trend line on the Falcon. If it goes out of sync just for a bar or two, that does not necessarily negate the value of the signal. All right, and still can't get any traction here on the NASDAQ, the bulls. Yeah, I should be trading crude oil. Tony says, man, oh man, crude oil's been paying off for me today. Only 2 trades, but good ones. Yes, crude oil making an enormous spike higher. I'm not quite sure what spurred that on, but I saw it unfold out of the corner of my eye, just boom, right to the upside. A good decline lower, and then it turns on its heels and straight up. That's the old crude market. All right, gotta make one more note here in my journal for the current one. You know, what bugs me about this is I would still be long my initial Raptor trade if if my stops didn't roll automatically. So I would still be long from down here, 46.78-ish. Oh well, it happens. And they've got some room up here to try to recover yesterday's ranges, but we got to get up here a little bit. Well, not a boring day today, that's for sure. Well, they've just gone flat. Flat after plotting higher. Well, I suspect we're going to see a little bit more here, but my goodness, they're dragging their feet. Come on, get up there. This is a tough market today. We saw all that follow through come early, and now everything's gone kind of quiet again. Daniel is asking. Dan asks, what should the tick sizes be for the Eagle, Hawk, and Falcon? Mine are all set at 5. Okay. For 99% of the markets you are going to be interested in trading, we recommend the following settings. 6 ticks on the Hawk, 8 ticks on the Falcon, and 12 ticks on the Eagle. About the only market that falls, or the only common market that falls outside of that parameter, is the E-mini S&P. And just a moment here while I load the E-mini S&P, and you will see what I'm talking about. The E-mini S&P, because it's at 1250 a tick, very often doesn't show enough activity during the regular session to allow you to use the default brick sizes. Now watch, it's going to make a liar out of me. All right, well that's not a bad session. You see the vertical daybreak line here, kind of showing us a reasonable amount of trades. That's all we're looking for, is we're looking for a reasonable amount of trading activity. And the last couple of days, the E-mini, all the stock indices actually have been very, very busy. But what typically happens with the E-mini is that you get your daybreak lines that look like this. And so you look at a whole day and you don't even have one signal, or the signal occurs, you know, in the middle of the night when you may not be watching the markets. If this happens, what you want to do is you want to change your settings from the default to the alternate settings, which would be a 4-tick hawk, a 4-tick falcon, and a 6-tick eagle. 4, 4, and 6. And the easy way to remember that is a telephone prefix for Moose Jaw, Saskatchewan. There you go. Now you'll never forget it. Now, feel free to experiment with the brick sizes. Smaller brick sizes will generate more signals. That's not always a good thing. Remember, we're looking for high probability signals. When you start fiddling with the brick sizes, what I recommend you do is you go through your chart and you look at your high probability signals and you see what kind of follow through there is. In other words, you would go here to your hawk and you would say, oh, okay, there's a first micro macro cross. Yeah, I took a little heat, but it looked like it worked out. Okay, here's a macro pullback. Yeah, that looked like it worked out. Let's see if I can find a 4-arrow consolidation. No, I can't. You know, here's another first micro macro cross. Here's another macro pullback. Yes, okay, so it looks like my settings are working. You'll also want to pay attention to your time printing here, because just because the signals are working, you don't want this to say 643, 643, 643, 643, 644, 644. You know what I mean? Like that these signals print so fast that you don't even have a chance to take advantage of them. And ditto for your other tools. You would go through and you would say, yeah, all right, so here's a trend change signal. Okay, I took a little bit of heat, but it looked like it worked out. Here's another trend change signal, and so on and so forth. And that's how you can determine what your brick size should be. But like I say, for 99% of the markets you're interested in, the default brick sizes will be the ones you should go to. If you're in doubt, you can write me, but don't be surprised if I write back and I say for 99% of the markets you're interested in, the default brick sizes will work. Again, the E-mini S&P being perhaps the only real exception. It seems any instrument that trades at more than $10 a tick, the E-mini, soybeans, wheat, well, pretty much the whole grain complex, they all trade at $12.50 a tick. The 30-year bond trades at $31.25 a tick. So if you're interested in the 30-year bond, we would scale it down even more, and we would go with a 2, 4, and 4. That's for the Hawk, Falcon, and Eagle, respectively. All right, they're struggling again. Doggone it, you guys. Get up there. Well, folks, I think we're going to shut down the room here. The market's just kind of plodding along. I do suspect it's going to try to head a little bit higher, or at least I hope so. But at the same time, things are starting to unwind again, aren't they? We're getting yellow bars here. We're right into the primary resistance line. Look at that, we hit it right on the number. All right, well, we're getting a little bit of a swing lower. I would expect the buyers to push one more time. And on this next push, I'm going to start getting more aggressive with my stops. I'm going to start to roll them up. And hopefully get into a profitable position. Come on, give me one more bar. Come on. All right, well, there we go. Okay, so I think it's time that we can start rolling our stops up a little bit. And hopefully we'll see a little bit more follow through here as well. All right, I trust everybody will have a nice, relaxing weekend, and I will catch up with you again on Monday morning. We'll talk to you then. Bye for now.